Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through a few things. We're, of course, going to give you an update on the portfolio, as you see on the screen here. But we're going to talk about a few things and some things that maybe I wouldn't consider doing and things that maybe I would consider doing, because I'm starting to hear a lot of weird theoretical things and maybe misunderstandings when it comes to investments. And now none of this is financial advice. It's just me voicing out what I'm hearing. And it's going to be around whether gold is a good option. This is not gold. Whether gold is a good option, whether you start selling because you don't like seeing the value of your portfolio go down. We'll discuss that. We'll discuss whether we continue to buy investments and those things. So we'll just go through kind of that kind of stuff, because I'm sure a lot of us have heard it, especially it seems like when times like this happen, the guys who always say the market is gonna crash at some point, it never goes up forever. These guys are like the conspiracy theorist kind of guys. Gold is the answer, or rare metals is the answer. We're definitely gonna talk about that one. And everyone seems to gravitate towards that unsolicited advice and opinion. And it's funny because when the market's good, when the market's going up, everyone's a professional, and everyone seems to just randomly say, you know, we buy low, we sell high, and that's what we do. And now we're in the depths of it. We are in a market downturn, and all of a sudden the principles right out the window for some reason, and people lose their marbles and they start doing irrational things, and it's fun to watch. But it's not fun at the same time. What I mean by that is that, you know, you see all these people that work so hard over the years to get a taste of what it's like to see market growth in their portfolio, and all of a sudden just ditch all the things that they've learned over the years and forget, you know, their ultimate goal when it comes to investing. And so none of this is financial advice, but that's what we're going to go through today, just as a quick summary. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. Just clear my throat here so we can go through the portfolio here. Portfolio closing out the day at $11,964.79. It's back under 12,000. Now we worked hard to get over 12, and now we're back under 12. Today we lost $92.56 in paper value, down 0.77%. In the past week, we're down $637.35, down 5.06%. For the 1 month, we're down $454.99, down 3.66%. For 3 months, we're down $1,345.07, down 10.11%. And for the 1 year, we are down 28 cents. You know, we were positive there for a whole year on this chart for a while there, and for the all, we're down. We're not down. See what happens when you get used to things going down or going up? We are down. We're not down. We're up $939.26, up 8.52%. I remember when we were like over 30% when we first started this portfolio, and now we're only over 8.5%. So as you can see here, red days, except for Qualcomm on there, and VFV, which is the Vanguard S&P 500 ETF. We have $8.87 in the cash account and $100 currently unavailable, because every week we put in $100 to build a dividend portfolio in a tax-free savings account right in front of your eyes. That's the portfolio. So we are witnessing something that we witnessed probably back in 2020, sharp drop and a sharp return, obviously. And then for the years to follow that, we had some great years. And this time around, we don't know. I think 2020, the downturn was about 30%. Here we're about at 20. And I'm leaving the tech sector out of that, because that place is just a bloodbath right now. But yeah, let's talk about a few things. So in these market downturns, I hear a lot of things. And the things I hear, the number one thing I hear about is gold. And this typically comes from the older generation, and I'm not dissing them or anything like that. I'm not saying they're not smart. I'm not saying any of that. I'm just giving you my opinion on my take on this whole you should buy gold or buy silver, because I hear about that a lot. And I have nothing against it. Believe me, I'm nothing against it. But let's put it into into context here. And some people in the older generation I can relate to, because they even think it's a silly idea to buy gold, because gold is not necessarily an investment to some people as it is for others. Now, I could say the same. Now, that's a very general statement, and so let me clear that up. Cars or vehicles are sometimes assets to other people. However, they can be liabilities to most. And so that's where I put gold in that category. It's not an investment for me. It's actually a store of value, because right now I think an ounce of gold is like $1,000 some, and you can buy the physical gold, you can buy the paper gold, and it is traded on the stock exchange as well. Now, again, let's put this into perspective. Let's say the economy absolutely just gets demolished, where there's nothing left. And there's a lot of documentaries or people in their conspiracy theories that gold is the answer. But let's go back like years and years ago, where gold was used as a currency, or rare metals. I think, from my understanding, an ounce of gold back in like the times of the Roman Empire, an ounce of gold would buy you, clothing, would buy you your whatever they wore back there, your tunic, your sash, maybe a bag to carry all your gold in, maybe some sandals, whatever it may be. Now let's go back to this century, and in 2022, if you bought an ounce of gold and you're carrying that around, you would exchange that for maybe some clothes, maybe a nice suit, maybe a Copley suit, a good custom Copley suit. If you watch TSN or SportsCenter, they're always sponsored by Copley. Copley is a Canadian company that custom suits, but also make pre-made suits as well. And a suit probably goes for about $1,000 some, very basic custom suit. But if you're going in the high end, you're looking at like maybe $1,800 to $2,000 for a nice suit. That's what an ounce of gold would get you. Now, the other part is, what are you going to do with an ounce of gold? Let's say you're not buying clothes. What if you're buying food? What are you going to take out your ounce of gold and a grater and start shaving down the grams or whatever it may be to pay for your groceries? I don't think so. And that's why I don't think gold is really a good hedge against what's happening in the market. It may be a good investment for some, but for others, it's just not. And if you're thinking, oh, I'm just going to buy gold in jewelry, let's say watches or whatever, you're not buying the gold. You're buying the craftsmanship of maybe a Rolex or a Breitling watch, a gold chain. It's not 100% gold. Hate to break it to you, right? And so that's my take on gold. If you're going to buy gold, I just don't see it being as a currency. But what if the dollar fails is the argument. Yeah, but let's take another example. Let's look at Afghanistan. Before they had the I don't know, I can't remember what the currency was, but when the war started, that currency was absolutely demolished and they put a new currency in place. That is probably what would happen. It's not like we're just going to go back to gold. I know people are talking about this gold reserve and things like that, but I think we're pretty far out from there at this point. And a lot of investors, let's face the facts, a lot of investors, they probably stand beside the gold, not the gold standard, but the reserve of the US dollar, because that's what we're used to now. Now, is it going to be knocked out of its place? Maybe not. Who knows, to be honest. But time will tell, I guess. And so it's just something to consider. The other part, okay, is that's gold. I don't want to go any further. I've gone enough of that, but that's just my take on it. And yes, you could argue with me, or you can put it down in the comment section. We can have a good discussion about it. The other thing is, should you sell your investments now? No, I don't think so. If you are selling now, you are selling at a loss. And especially if you have it in a tax-free savings account, if you sell at a loss, remember, you're going to be losing that contribution room that you've accumulated, because you can lose contribution room. Let's say you bought a stock at $100 and it went down to $1, you lose that $99. You have to make that $99 back in paper gains and withdraw it to get back to that limit. So other thing to consider, should you sell? Probably not, unless you really are okay with losing that amount of actual not physical, but actual dollar value and not paper value. Because right now we're just losing paper value. We're not losing dollars per se. So would I consider that? Probably not. And like I've talked about, and I sound like a broken record, if you believe in the company and for the long term, you'll probably be hodling it for quite some time. And that brings me to my next point. Should we be buying? Yeah, I think so. For myself, my strategy is always dollar cost averaging, but this is a personal goal kind of idea for everybody. Everyone's situation is different. Everyone's goals are different. Everyone's age is different, and stage of life. And so if you are buying, yeah, we have to consider, with the cost of living going up and inflation also being another topic, we definitely need cash reserves. So you probably want to start building a cash position, which we'll talk about in the next point. But should we continue to buy? If you can, I know I will be, as we do $100 a week, but I will start considering reallocating some dollars, not to just buying equities, but looking at building cash reserves for anything to happen. We know that companies do this. We know that big investors do this. And we know, yes, we know Warren Buffett does build cash reserves as well. And I'd imagine all the Warren Buffett fans out there probably live by that. Maybe, because we're in a downturn, they might not anymore. And they might be like, no, cash is not king anymore. We got to do whatever. But we got to figure out, for myself, I got to figure out, where am I going to deploy this cash? How much do I want to deploy once we start seeing a correction back in the bull market trajectory? And I'm going to put a dollar value on it. And so I'm going to start building a cash position, but not directly into this account, but maybe into a separate like checkings account or savings account to be ready to be deployed when we've seen kind of the actual bottom, which we don't know when's going to happen. So I might miss it by a week, maybe 2 weeks, but we'll buy on the way up. And that's a great thing. And so just reallocating, maybe trimming back your dividend reinvestment plan as well. That's also a consideration, and using that as your cash flow for the time being while the market does its thing, or reinvest it if you already have the cash reserves to continue doing your lifestyle the way you do your lifestyle. So should we continue to buy? Totally based on your goals and what you're trying to achieve. Building a cash position though, this is very important, I believe. Building your emergency fund. I talked about this months and months ago. When things like this happen, inflation happens, you want to be ready for that. You want to have an emergency fund because things are costing more. You probably want to inject that with some serious more cash, give it a boost, and build that reserve so that if anything happens where you need that cash, you don't have to sell off your investments at a loss to recoup, your lifestyle, to make up for the shortfall in a sense. So you want to build this cash reserve so you don't have to touch your investments, because your investments are for the long term. For myself, I will not be selling my investments. I will continue to reinvest all the dividends. I'm not taking any cash out. I'll just reallocate some dollars into a different direction, which means I probably won't be buying in my other portfolio. I'll just reallocate that to building a bigger cash position, buffing up my emergency fund, and just getting prepared just for the worst case scenario. And again, this is based on your age. If you're in retirement, you're probably already selling most of your investments, not most, but some of your investments to fund your current retirement lifestyle. And so that's pretty much it, guys. So if you have any comments or anything, leave them down in the description below, or not in the description, but in the comment section. And don't forget to subscribe and like. And hopefully you guys did enjoy the video. Hopefully you can take something out of this, and we'll definitely see you guys in the next one. Bye.